Major banks are bracing for credit stress because Americans are running out of cash and out of time. Loan loss reserves are climbing, delinquencies are ticking up, and even dollar stores are feeling the squeeze. With wages lagging inflation and BNPL masking the real damage, the warning lights are flashing across the board. Watch the full video, because what starts as a spending problem could end as a banking crisis.
Gary, moving to thing number 4. We talked about this a while ago, and we haven't talked about it recently, but we're going back to consumer credit, consumer debt. Banks have actually increased loan loss reserve as more leveraged customers go more delinquent on higher balances. Obviously concerning. Gary, you said this concerns you as well. Thing number 4, major banks are preparing for credit stress, back in the headlines.
So in this case, we're going to go to the graph, and credit here to DKI intern Cash and Crow, who put together this graph for us. Also, other DKI intern Samak Jain doing a fantastic job. Our young people really knocked the ball out of the park on the research and graphs and the writing. They do a ton on the 5 things. They deserve credit by name. Happy to give it to them here. In this case, this is a graph put together by Cash, and if we go back to right around 2021, consumer credit use was under $800 billion. That has now risen to about $1.1 trillion. That is a big increase, right? We're talking about a 35-40% increase in just 4 years. And predictably, the delinquencies have gone from about 1.5% of balances to more than 3%. So the delinquencies are up a little under 3x, maybe 2.5x in that time. Now, is that a huge disaster? No. If we go back to like the 2008, 2009 great financial crisis, the delinquencies at that point were right around 6.5%, 7%. That was a whole lot worse. But it is a big increase, and as a result, the big banks are starting to take larger loan loss reserves. So from an accounting point of view, don't tune out yet. I know once you hear that, it sounds boring, but we're going to keep it really simple. From an accounting point of view, when a bank makes a loan, they're recognizing the profits from it, but they say, hey, we've just made this loan or extended this line of credit. We expect that there will be a certain amount of losses associated with it. And so what they do is they take a reserve against it. They're called loan loss reserves. And then when their customers go delinquent, meaning, or they haven't paid for 30 days, they're delinquent. And at 90 days, they start charging that off. When they charge it off, meaning they say, we're not going to be able to collect this, then they take that, they make a charge against their loan loss reserves. That's the accounting version of this. And so what the banks are seeing is, wait a minute, we're seeing an increase in delinquencies on higher balances. As a result, what are we going to do, right? We're going to increase our reserves. That's reducing profitability there. And the banks are right to do that because, like we said, Americans are carrying larger balances, expressing less confidence in their ability to pay them down, and that's creating tension for the U.S. banks.
Yeah, with that, Gary, I mean, what should individuals be doing about this? Does this speak to, just individuals understanding? What can our educational system, is a gap there, right? Just with how people manage their finances and the lack of understanding. What should people be doing with this information?
Yeah, so, there are a couple of things going on here, Rob. First of all, people are starting to use buy now, pay later for their groceries. That's a really bad sign. But generally, when people are using those kinds of financing for groceries, it's a sign of severe financial stress. If people don't have enough money to buy groceries, then they're going to do what they're going to do. And there's not much that we can do to advise them. I mean, any advice that we give would sound really obnoxious, telling people we'll just make more money or just spend less when they're financing their food is just insensitive and not effective. And I don't want to be saying that to people. But for everybody else, I just point out a couple of things. If you're starting to feel financial stress, look for places that you can cut back. And on a personal level, I just did a show And I'll be releasing the link on this. But I did this with Carrie Lutz, where we were talking about the fact that I rented out my house for a year. Now I was in a position to do that, but the rent that I get on my house, where I'm now living in much smaller apartments all over the world, I'm living a fun, interesting life that way. But it also saves me a lot of money. That's what worked for me. But for other people, it's okay to look for ways to reduce your expenses a little bit, and that will help certainly a lot. More than that, I can't change the fact for people that wages haven't kept up with inflation in decades. That's a disaster. But there's not much that I can say about that. When people, like I said, are using credit and buy now, pay later to afford groceries, that's a structural problem. And again, there's not much that we can do to help people with that. But it's really important to point out that our educational system intentionally avoids teaching students about budgeting or about finance. Too many young people use buy now, pay later, and later they're shocked when they receive bills. That's crazy, right? To be spending money and not realize that you're going to have to pay it back, to pay those loans back later. That's an education problem. And that's something where people should understand the financial services that they're using, the financial products they're using. We're doing what we can in this show to educate people. I advise people, to the extent that you are able, please avoid buy now, pay later. It doesn't solve your financial problems. It just delays them. The banks are right to prepare for escalating credit problems, but for everyone else, we're doing everything we can to help you better understand what's going on in the financial world. I can't fix the fact that the system is skewed against you, but we'll do all we can to help you make better financial decisions and support you in that way.
Yeah, well said, Gary. And if you do have any questions, head to our website, deepknowledgeinvesting.com. You can actually use the Ask Gary feature. Can answer any questions that you may have about information you've heard on the show, what you might have questions about related to portfolio, the whole 9 yards there. You can also email us at ir@deepknowledgeinvesting.com. And then when you head to the website, be sure to grab a free subscription. All you need to do is enter your email, as well as you can head to our subscribe now and see the different premium options we have, both individual, family office options for you there.